Hey, what's up, guys? Thanks for tuning in to today's episode of the Bell Zone, where I go over all things real estate, business, money, finance, investing, all of it. Let's go. Big question. I think everybody's asking this. Will the housing market crash? People have asked me that, and I want to kind of give this from my opinion, my humble opinion, and I've been through a couple of different market cycles. I don't think the market's going to crash. I think this is a market correction, which will cause prices to change. Properties are going to change. Sellers are going to be thinking differently. They're going to either sell at a discounted price because they can. Buyers are going to be looking to buy something at a different price because they can't afford to pay what they used to be able to pay before based on the debt they got to get because rates are up. So that is not a crash. A crash means the bottom falls out. Everybody's losing it. Banks are shutting down. Banks are closing. Neighborhoods are vacant. That's different. That's a crash. This is a correction. This is saying, hey, we no longer can pay this price for this property. This is what we can pay, right? Now, when you're investing based on the cash flow, which is what you should be focused on, cash flow supports a certain amount of debt, right? And if that cash flow doesn't support the certain amount of debt and you still want that property, then you're just going to have to put more money down. That won't change. That means a lot of people who have to sell, let's say bigger institutional investors that have a 300 unit apartment complex, let's say they have a deal and the debt that they got on that deal is a floating rate, right? That's already happening. Like it's that those things are correcting as we speak. As that rate, let's say the rate was 3%, they were going to do this for 5 years, and now that rate to be able to either refinance it or sell it to a future buyer, the new rate is going to be 7. Crazy. But that's what's going on. That's just within the last year. The price of that property for what it could support for somebody else to come in has to adjust. It can no longer be a 30, 40, $50 million deal. It's going to have to adjust down. So whoever's buying it that will get debt on it, because those deals all have debt, they're going to have to say, okay, we're willing to put down 50%, 40%. But the debt, even then, still can't be handled by the cash flow. So what are we going to do? At some point, somebody's going to meet somewhere in the middle. They're going to say, hey, you know what? We have these properties, they're on our books. We can no longer handle them. The rates are going up and adjusting because we're beyond capacity as it relates to the rate cap we purchased. It's already timed out. And we need to sell, get it off our books. Here's what we're willing to take for it. And pay our investors if you're willing to come down to these margins. And the new buyer can say, you know what? That makes sense. I can still put down 40% and the debt can now be covered by the cash flow based on today's current rate. That's a correction. Before, it was incorrect if you want to take a look at it. So, will there be a housing crash? No, but there is a housing correction. It's already happening. Winter's already here. Get under the roof if you can. But as an investor, you want to take a look at that. We're taking a look at it and say, hey, who needs to off their properties? They bought it 3 to 5 years ago, and now they have to sell. And then the buyer's pool is smaller based on this new based on this new market correction, but the cash flow is still good, right? Can we make that deal work? And the big picture here, they have to sell. Institutional player, fund managers, syndicators who promised their investors they were going to be out in 3 years or 5 years, give their money back, and they got to go. And now they got to go to a pool of people who are in the debt market that the rate is adjusted, so their price points have to come down. Long as they're going to make their investors hold, they'll probably sell. That is the difference of what happens when there's a correction in the market. Sellers and buyers come to an agreement and say, hey, this correction is actually putting us on an equal playing field. So hopefully that solves your solves the question about crash or correction. In the end, though, if you listen to nothing else I say, focus on cash flow. You're investing in cash flow. The cash flow is always going to be the same. That is going to be the value of your property, no matter what happens in the debt market or not. If you can keep it long enough, you'll always make money on those type of deals, no matter whether we're going through a crash or a correction. All right, so I hope that helps to answer that question. Crash or correction? Correction. That's what we're going through right now, and we'll probably be going through that all the way from 2023 to 2024. It'll level out in 25, and then rents are going to skyrocket in 2025, 26, all the way through to probably 2032. That is my assessment prediction. I see that happening. I think rents are going to keep on going. And this next 2023 to 24 is going to make that happen. So this is the time for you to be playing this game. Investing with me, investing with Bell Capital, investing with somebody else. No matter whatever it is you're going to do, get in this game. This is going to be the opportunity of a lifetime, and it is happening today. Let's go. All right. Like this video, share this video, comment on this video. If you don't like it, give it a thumbs down. Don't be a hater and a hider at the same time. But I hope this helps for all you guys wondering, are we going through a housing crash? No, we're not. We're going through a housing correction, and you can still play this game 100% as long as you are disciplined enough to pay attention to the cash flow.